Hello, everybody. It's Chuck Carnevale, co-founder of FAST Graphs, the fundamentals analyzer software tool, bringing you another Lessons in Valuation 2-minute drill, subscriber request series. I've been asked to look at some Chinese companies, JD.com. I did Alibaba just the last video. Now I'm going to look at JD.com. Now, JD.com has been a very good growth stock, but I do want to make a point. There's one period of growth here. It's showing a 42% growth rate. So I want to bring this down to a more manageable number, and I want to take out this 4,600% growth rate, which makes the math a little crazy here. So let's drop this to a 9-year chart, and now we see a company that's grown earnings at 35%. Now this is an ADR, American Depository Receipt. It's not the actual company, but this is all adjusted in US dollars. You can see the company did started paying a dividend in 2022. They did cut it for 2023 and beyond, but it's actually been growing ever slightly. So it's yielding about 2.19%. It has a very high earnings yield of 9.78% because when you look at the price, there was a time when the market was overpricing this stock. We're using the P equals growth rate formula here, but we actually limit it to a 30 multiple. And as you can see, this orange line is a 30 multiple. JD.com was trading at 50 and 60 multiples prior to having a flattening of earnings where earnings dropped to 5%. You can see the effect it had on stock price. But now the company's growing earnings again, and the stock looks significantly undervalued. But I do want to make a point. The earnings growth rate has been 35.8%, but as I shorten the time frame, you can see the growth rate gets lower and lower. Another point I'm going to go to fiscal fitness real quick and look at margins. And I want you to note that their margins, especially their net margins, are beginning to improve, but they had gotten pretty weak over time. So all in all, I think this is a very inexpensive looking company. As always, there's no replacement for comprehensive research and due diligence. This is just by the numbers, look at the company and look at what it might do in the future. Thanks for watching. And if you liked the video, give me a like, subscribe to the channel, and take a look at subscribing to FAST Graphs. And the question I had, yes, you can evaluate any company of any country, Chinese or otherwise, by looking at the numbers, because the numbers always result in the same results. How much income or how much cash flow is a company capable of generating on its shareholders' behalf?